From FXEmpire, this is Christopher Mullen, and I want to cover the SP 500 this morning real quick because we got a really interesting market situation starting to set up. Now, yesterday, the market's been going like a yo-yo, down one day, up the next, down the following. Yesterday was a big down day, negating most of the previous day's gains. Today, we are down another 5% on the indexes, and we're seeing the NBA season being suspended or being postponed. We're seeing air traffic is going to be halted coming to the U.S. from overseas come Friday at midnight, and that news has shocked the market and it sent the price plummeting this morning. Now, if you look at the SP 500, everyone, I think this could be a very significant turning point for the equities market today. This could be the final straw of some real capitulation selling, and it's a measured move and it's a long-term support zone. So let's take a look at the chart real quick. You can see here that more or less the market has made this initial sell-off down to here. This is the first leg down. We've got a bounce up, and using Fibonacci extensions, it gives us the downside 100% measured move target, which happens to be right where the market is trading this morning. And so this is a full momentum move to the downside. It also happens to be 20% to the downside from the January 1st this year. So the markets are down 20%, and we've got a 100% measured move on this this pattern. Now, if we were to zoom out a little bit longer here, take a look at the longer term chart. Let's just go across here. You can see, oops, actually I need to go a little further, go way back here. If we look way back and draw a horizontal line across this price action, this 100% measured move where price is trading, we bring it straight across here. You can see this is a fairly significant pivot zone in the market. More or less, we've got pivot low here. We had a pivot low tag over here, another one here, here, and here. And we had a breakout and an exhaustion rally here before we had a 20% or 14% correction over here. And more or less, this is a really significant pivot zone in the market. The market is going to try to find support here today. And I think this is going to be the straw where everyone really freaks out on the session and panics. Now, if we were to take a look at a couple other charts, just take a look. This is going back. This is 2009. This is the end of the bear market. The market turned up. We got into a full out bull market. We had a 21% correction, and then the market took off. Last year, actually, we saw the market sell off. We saw a 20% correction again. The market took off to new highs. Today, we're down 20%. With this morning's actually morning gap, we're going to be down 24%. But overall, we've seen these type of corrections before. This one is a little different. This is broad spread businesses closing globally. So I think this is going to be the one that tips the hat. Eventually, we're going to move into a bear market. But if you take a look over at, this is the 2001 market top in the SP 500, and then we had the bull market, and we got the 2007, 2008 market top. Now, what's interesting here is if you look at the price action, we had a 19% correction from the high down to the low over here. And then the market bounced about 10% before rolling over. And this is the weekly chart. So just remember, this is usually 3 to 6 months that the market trades sideways before it starts its full out bear market. Here we had a 20% correction from the high in 2007, 2008. We had a 14% rally. It took 6 months before the price came and broke this low again and went into a bear market. So that's where we more or less, I think, are. We are in this 20-25% pullback. The market is probably going to stabilize and bounce and trade sideways for a few months, because a market that rallies for 7 years, 12, we're in a 12-year bull market right now, doesn't typically just roll over in 2 weeks and crash and go into a full-out bear market. That would be a major crash situation. But what we've seen in history is it usually takes months. You see an initial breakdown, where we're at now, and then months of the market stalling and really struggling to get a grasp. And when it starts to break down, that's when we enter one of these full-blown bear markets. So that's where we are in terms of the market. We need to see the market bounce and stabilize and rally significantly to hold this bull market. If it stalls and trades sideways over the next couple of weeks, or actually next couple of months, if it trades sideways here, then look out below, because we're coming back down to much lower levels going forward. That's it for now. Take care.